Happy Monday. Appreciate y'all joining us today. So we've got a pretty consequential week in the markets this week. Um, Really kind of the two biggest topics that we've been talking about for the past few months are kind of all coming to a head. So you've got potential for a ceasefire in Iran. It seems like it's more concrete now than maybe some of the other rumors of a ceasefire that we've had the past few months. Um, and the other big market moving was a Fed chairman, and we've been talking about a new Fed chair for months now, and we have a new Fed chair, Kevin Warsh, and his first meeting is this week. So certainly some things that could move the markets, and thankfully, it seems to be things that are going to move us in a positive direction. So um, I'm gonna make this as interactive as we can today, and want to get some feedback and kind of get some opinions. So, okay, so let's start with Iran. Do you all feel like this ceasefire is actually the one? What do you guys think? Do you think that this is going to stick, or do you think that this is going to be like another one day? Nah, just kidding.
I think it's the one. I think they kind of get the picture now.
One, Drew says no chance. Jennifer says no chance. I don't know. I kind of feel like that it may stick here. And the reason why I say that is I'm not smart enough to know the answer, but the market likes it. And I think the market is telling us that they believe that it has a bigger chance of sticking than some of the others. And there's been lots of talk of a ceasefire, kind of on X, social media the past few months, but this seems to be a little more formal. There's a formal meeting this week. Um, I'm going to pull up today's market update, which has some interesting intel. So let me share my screen here. I was actually watching CNBC this morning, and they were talking about this, and there's a key player in Iran. And so in Iran, you have like kind of the hardliners, and then you have like the moderates. And some of the hardliner like clerics maybe less apt to have a ceasefire, where some of like the moderate, more like traditional people that run the government, are more likely to have a ceasefire. So this person, I'm not even going to try to pronounce his last name, but Galabeef here. I was watching the news this morning, and he tends to be a little more of a hardliner, represents the Ayatollah, has been a little bit against the ceasefire, a little bit more likely to kind of um, stoke some flames on rhetoric, like we're not going to comply, this, that, and the other. He's supposed to be there, so it'll be interesting to see what happens on Friday. But it to me feels like we're a little bit closer to something real happening, and um, hard for me to make the call on that. I think none of us really have enough information to make that informed decision. But the market's like it. Oil prices are down, the bond market's rallying a little bit, so it'll be interesting to see what happens. But that's going to be a big market mover this week. Um, and I'm going to jump into the charts here just while I'm on this page. So um, we're up 18, well now 22 basis points this morning in bond pricing. The 10-year treasury is down. And if we look at the charts, really ever since, like the middle of May, we've been on a nice rally here. We had about a week or two where things pulled back. But if you look to see where the bond market is today, and let me just draw this out a little bit longer period of time. So we'll go back to 6 months. Where we are right here is about as good as we've been for most of the past few months. This is when the war started in March, and we had that initial sell off. The only time bond pricing was higher, i.e., mortgage rates were lower, we had a couple weeks here in the kind of end of April, which was like the first round of potential ceasefire talk, which then failed and the market sold off again. So we're approaching levels we haven't seen for a little while. Today we're about as good as we were at the end of May. So it seems like things are trending in a positive direction. Um, Let me ask you guys another question and give me a yes or no answer. Um, do people buy houses or sell their houses based upon a quarter of a percent in interest rate? Meaning that if rates went up a quarter of a percent, would they get out of the market? if rates went down 0.25%, would they go into the market? Like, does that make a big difference for people? So I've got a couple no's here. Okay, so I'm going to agree with you guys. I don't think that makes a difference. 0.25% is not really a meaningful amount when you look at how it affects someone's monthly payment, cash flow budget, things like that. Okay, so let me ask you guys part two of this question. Does political news, economic news, or anything people read online, see on TV, or social media, does that have an impact on them buying or sell houses? Yes or no? Okay, cool. And so I think we're all on the same page for the most part, right? And so, and Jim, I agree with you. Unfortunately, yes, right? And so, does the slight improvement in interest rates that we're likely to see this week if the ceasefire holds, does it really make a meaningful difference? It really doesn't. From an economic standpoint, a payment, cash flow, debt to income ratio, budget, it's not going to move the needle. But from a perception standpoint, will it move the needle? I think it will. I think the public is looking for positive news. I think the public wants, no one wants to be at war long term. No one wants higher gas prices. And so the effect of slightly lower interest rates probably doesn't make a big difference, but lower gas prices, um, even though a dollar more a gallon may cost you more like less monthly than a quarter higher interest rate, you fill your tank up more often than you look at your mortgage statement, right? And so lower gas prices, just from like a positivity standpoint, I think that'll draw some people back in. So we're probably going to have some good news to share with our clients this week, which is like, hey, ceasefire, oil's down, inflation's down, gas prices are down, interest rates are down. Let's get in the car and go look at houses this weekend, right? And so I think that's where it's more likely to impact us is more the perception than the economic reality. Um, there's the other big news of the week is Fed Chair Warsh. So his first meeting is Wednesday, and last week, and this is interesting and how fluid things are. I'm going to share my screen again. So last week, kind of pre-potential Iran war ceasefire, I made a comment that I think we're closer to a Fed rate hike than a cut. I mentioned that last week. And I also said that I think a Fed rate hike could actually be good for mortgage rates because it would send a signal that the Fed and new Chair Warsh is willing to fight inflation and how quickly things can change. So this is the Fed CME. No one's expecting any movement in rates this week. Um, very few are expecting any movement in rates next month. July 26th is the next meeting. 6% of those polled think it's a hike. But even by September, only 25%. When we showed this chart last week, it was pushing 50% of those polled thought you were going to have a Fed rate hike by September or October. That number now is down to 30%. So just on news of a potential ceasefire and what that would do to oil prices and then in turn inflation, you went from 50% expecting a hike because inflation was drifting higher to only 30% expecting a hike at the September October meetings. And so this will be very fluid. And when I said last week that I would be happy if the Fed hiked, that was if inflation continued to trend higher, if the war drug on, if oil prices stayed high. If this ceasefire does hold, oil prices come down, inflation comes down, then we really don't need a hike. And so I'm going to ask you as another question here. I'll stop sharing briefly. Do you think that Fed Chair Warsh would rather hike or cut? Okay, what do you think? Think he would rather hike or cut?
Cut.
He wants to hike because it shows
All right.
we're in better condition.
Let's cut.
So, Jimmy and Ryan, I think I heard both of you guys. So I think you're both right. I think if inflation was elevated, he would probably prefer to hike in the short term to send a signal that he's going to fight inflation. But I think if you look big picture, he wants to cut. Like he wants low rates lower. And historically, he's been a guy that prefers lower interest rates, but does not want Fed intervention like QE. And so quantitative easing. So why did rates get to an all-time low during COVID 2020 and 2021. Hundreds of billions of dollars of Federal Reserve artificial influence in the market, quantitative easing or QE. They were buying mortgage bonds and treasury bonds and artificially drove rates lower. Kevin Warsh is not a big balance sheet Fed guy. He wants less Fed involvement. He wants lower interest rates naturally. And so it'll be interesting to see what he says on Wednesday, but a hike is definitely off the table short term, probably pushed out, the odds of it longer term with this potential ceasefire and what it'll do to oil and inflation. And it'll be interesting to see if we do have a ceasefire, if the Strait of Hormuz opens up, right? If it's opened up this week and oil's flowing and oil prices go down, how fast can inflation come down? It's a lagging indicator. If you guys remember when the war started, it took a month or two for inflation to start showing signs of heating up. Probably going to take a month or two to see signs of inflation cooling. The market will move in advance of that. They'll move in anticipation of lower inflation. But it'll be interesting to see what Fed Chair Warsh says this week, because before the weekend and the potential ceasefire, you were probably going to hear hawkish comments. We're going to fight inflation. We need to slow it down. Now that the ceasefire looks like it may happen, it'll be interesting to see what he says. I'm going to link his Wikipedia page here. And I think every single one of us should understand who he is and what his policies are and what his background is. So I just put a link in the chat to his Wikipedia page. If you guys, aren't in front of a computer driving, just Google it. But his history will tell you what he wants to do. And he wants to be less involved in artificially lowering rates. He wants to telegraph a little bit more in advance of what the Fed's intentions are. And so his speech on Wednesday after their meeting might give a little bit more information than prior Fed chairs. In the past, a lot of Fed chairs will give you these cryptid messages, which the market would spend 3 days trying to translate of what the heck they meant. So it's going to be different. So you're going to get some reactions this week, but I do think that you're going to see some positive movement overall. Okay, so I've got a couple other things I wanted to share with you guys here. So I'm going to jump back and share my screen. So on today's market update, and so the service that I sometimes share with these charts and graphs, it's a program called MBS Highway that most of us have been involved with and followed for many, many years. So we're up 33 basis points now. So the market's kind of continued getting better even while we're on this call. But every day we get an update, and a lot of the content that we share comes from this. And this morning's update had a very interesting statistic, and every one of us should be able to rattle these numbers off. Before I jump into this, so I'm in Boise, Idaho right now. We have an office out here. So I flew out yesterday, and I was in an Uber. And when you're in Ubers, do you guys talk real estate with people ever? Or first of all, do you talk period to the Uber driver? But do you ever talk real estate?
Yep.
Anybody?
Yes.
Okay.
Yeah, of
I
course.
think it's awesome to talk real estate with people that aren't in real estate because you get their opinion. And Uber drivers are fascinating because if you think about the number of people they talk to on a daily basis that are in random industries. And so I'm talking to my Uber driver yesterday about the real estate market, and pretty sharp guy. I'm guessing Uber's to side hustle, and he's a little sharp guy, right? So we had a good conversation, and he had a pretty good feel for the real estate market. And I was expecting him to ask me some questions about like a crash. When's the market going to deteriorate? Our home values going down, this, that, and the other. Especially, I'm in Boise. Boise, like some of the South, got really hot during COVID, and probably as much as any market in the country, like Boise, Vegas, and Austin, Texas, are probably three of the markets that have seen the most price depreciation in the past couple of years. But he wasn't expecting any type of crash. But I do think that a lot of people, think there might be some crash. So, Duba, can you see my screen on the MBS Highway update? Good. Okay. So these are numbers that I think all of us should know. So this is according to the Federal Reserve. So at the end of Q1, owner-occupied real estate had a total value of $49 trillion, and debt of $14 trillion. Okay, which means you had 35 trillion in equity. So basically, your average American is sitting on like a 30% loan to value mortgage. Okay, so if you were going to have a real estate crash, you're not, because you're sitting on literally 70% on average in equity in properties. That's a really good statistic to share with people, especially buyers that are waiting for, like, I'm waiting for a crash, I'm waiting for prices to tumble like they did in 2008. It's not going to happen, and the main reason it's not going to happen is these three numbers right here: 49 trillion in market value, 14 trillion in debt, 35 trillion dollars in equity. um, and another way you could look at it is you could just say the average owner has a 30% loan to value mortgage, meaning 70% of their property value is equity. So powerful stat to share with people. Okay. The last two or three things I've got, and then we'll let you guys wrap it up. I didn't want to bring a bunch of charts and graphs today. I think just the Fed and the Iran war are really important topics. Okay, I'm gonna ask you guys one more question, and then we'll talk about this and we'll wrap it up. Um, what is the down payment required for an FHA mortgage?
None.
Does anybody know? Anybody know?
Well, I mean,
Okay.
3.5 is the guideline, but
So the down payment
Please.
required for an FHA mortgage is 3.5%. Okay. I think we all know that, right? So a $200,000 home, how much cash do you have to put down if you're getting an FHA mortgage? So 3.5% of $200,000, $7,000, right? Um, and so let's talk about first time home buyer / no money down programs. We get the question all the time: do you have first time home buyer programs? Like it's some magic bullet. Um, there's very few programs that are only available to first time home buyers, and most of those are some form of down payment assistance. Um, what other criteria do most down payment assistance programs have? They typically have an income cap. And with what prices have done in the last couple of years and interest rates being elevated, you need to make a lot more money to buy a median priced or an entry level home than you did, let's say, 5, 6, 7 years ago. And so in most of the country, and it varies state by state, but in most of the country, um, income was not a challenge from a standpoint of, do we make too much money to qualify for the first time homebuyer programs in Florida, South Carolina, and Idaho. In 2017, 18, 19, 20, if you made less than the income cap, so let's say the income cap was $90,000. Back then, if you made less than $90,000, you could buy an entry level home or a median priced home. Today, and over the last couple of years, with interest rates higher and prices higher, it's a lot harder to make less than the income cap and qualify to buy a house in a price range that's realistic, a medium priced or an entry level. And so that's one of the main reasons why in Florida in particular, but around the country in most states, you're seeing a lot less first time home buyer down payment assistance type of programs. And so there's a gap there. And the gap is someone who is a first time home buyer who doesn't have a lot of cash to put down, but makes too much money to qualify for a first time home buyer down payment assistance. In Florida, it's Florida Bond, South Carolina Housing, Idaho Housing, things like that. And so some of our team knows the answer to kind of my trick question, which is when they said zero. I heard Cole say it, Aaron posted it. You can get an FHA mortgage with no money down. And so what does that look like? Um, so let's say I'll use Florida as an example. Let's say I'm buying a $300,000 house and I'm getting an FHA mortgage. 3.5% down is $10,500. Traditionally, I'd have to put down 10.5, right? Most of the Florida down payment assistance programs provide $10,000. And so in theory, 3.5% down is 10.5. I can get the $10,000 first time home buyer program. That more or less covers my down payment. We're in a more favorable market for buyers. I can probably negotiate for some seller closing cost credits, and I can buy a house without a lot of cash out of pocket. But with today's rates and prices, and the median income or income caps on all those programs not going up in the last couple of years to catch up with prices being elevated. There's a lot of people that need to make more than, or they do make more than the state number, but they still need the assistance. And so the zero money down FHA we're talking about is basically a 96.5% first mortgage and a 3.5% second mortgage. Most down payment assistance programs, the $10,000 number I keep using here as down payment assistance, it's an interest-free repayable lien that gets attached to your property and it gets paid off when you sell your house. That's how it works in most states. The no money down FHA that works if you make too much money is a repayable loan over 10 years. And so it's going to add $100 or $200 a month to your payment, depending upon your price point. But there's a big gap there. I make too much for down payment assistance, or I'm not a first-time home buyer, but I don't have a lot of cash to put down. And so that's a trend we're seeing more and more of. And there's two programs, Essex and Chenoa are the two most common that offer this. And you guys may have heard those terms before, but could probably count on one hand or maybe one finger the number that our team did on a monthly basis up until about 6 months ago. Over the last 6 months, that trend has continued to pick up, and we're closing multiple of these now every single month. So just keep in mind that if someone isn't a first-time home buyer or they make too much, there are no money down programs available through the FHA, outside of the traditional USDA and VA no money down, which have other criteria that people can't, necessarily meet. So just keep that in mind. It's kind of an interesting program. You can buy it with no money down. The last question I have here, and we've got a chart on this that we can share if you guys would like this, but do you know what the maximum you can get in seller paid closing cost is? And I'm going to go loan by loan. So FHA mortgages. So does anybody know the maximum allowable seller paid closing cost on an FHA loan?
6.
6.
6. Okay. I'm glad all of the mortgage loan officers on our team are answering these. I'm pretty confident we all know these answers. But for the realtors on the call who may not do this every single day, so 3% is kind of like a traditional, I'm going to ask the seller for closing costs, like just cap that most people mentally cap out at. On an FHA, you can go to 6. And here's why I mentioned 6. Are you seeing price reductions of 5% in some markets? You are, right? You weren't years ago, but you're seeing some of that now. Do you need 5% of the sale price to cover the closing cost on an FHA mortgage? You certainly don't need it. But if you can negotiate for, like, 3% is probably enough in most states. But if you can negotiate for more than 3, 4%, 5%, up to 6%, what can you do with that additional money? You can use it to buy the rate down. And I'll give you guys an example. So we've got a first-time home buyer that someone in our office is working with. They found a house they love. It's a little bit more than their budget. They need to be at 5.5% to make the numbers work, right? And rates are not at 5.5%. But can we get them to 5.5%? We certainly can. We can do it by buying the rate down. And so this person's going under contract with one of the loan officers in our office today or tomorrow with a 5% seller closing cost credit. 3% is really enough to cover the closing cost. The other 2, we're buying the rate down. That gets them to a rate where they can afford the monthly payment. So don't limit yourselves to 3% on FHA. Okay. Conventional, you can go for anywhere from 3% to 9%, depending upon the down payment. I'm not going to talk about that a lot today. The last thing I wanted to mention, because it came up over the weekend, on an investment property, okay, there's 2 different answers. The maximum closing cost for an investment property doing a conventional mortgage is 2%. And I think most realtors are probably accustomed to that 2% is the cap on an investment property. DSCR loans, at least with us, you're allowed to go up to 3. And that's important because most people think investment property, 2% is the cap. You can actually go above 3 with the right lender. So don't expect you guys to remember every single detail of closing costs available and FHA conventional, what they are. Just know that each program is different. But in a market that's a little bit more favorable to buyers, there are some opportunities where you can go maybe above what you might have historically asked for, 3%, 4%, 5%, and 6% in some cases to buy the rate down. And if you've got a payment sensitive buyer, it could be a good tool that you can use. All right, guys, with that, we will let you run. Have a great day. Have a great week. If you are in Central Florida and you're watching Team USA in soccer, we're doing a watch party this Friday at 3 to watch us play the Aussies. If you guys are in Central Florida, join us for that. And we will see you guys next Monday. Fed meeting on Wednesday, 2:15, turn into CNBC or Fox Business. That's when Fed Chair Warsh will be speaking. Will be interesting to watch his testimony or catch it on YouTube, later that evening. But watch and see what he says Wednesday, because it'll be market moving and it'll give you some great talking points for your customers. Have a great day and a great week, everybody, and we will see you guys next time.